Chapter 1. The Morning Before the Fall. Looking back at the late summer of 1929, the thing that surprises people most is how ordinary the beginning felt. Crashes don't announce themselves. They don't arrive with panic or headlines or any of the noise history books like to describe. No, they begin in silence, in subtle shifts, in small signals that only reveal their meaning in hindsight. The morning I consider the first true step toward the crash was quiet, almost peaceful. I woke in my suite at the Hotel Gotham just after sunrise. The light that filtered through the curtains was pale and narrow, stretching across the ceiling like a thin blade of gold. I sat on the edge of the bed, letting my eyes adjust, listening to the muted thrum of New York waking below me. Carriages, delivery trucks, street vendors, all the sounds of a city that believed it stood at the pinnacle of prosperity. Everything seemed normal, but normal can be deceptive. I walked to the desk near the window where the morning newspapers waited. I scanned the familiar array of bold, confident headlines, new market records, soaring valuations, experts predicting endless growth. To the public, these were reassuring signs. To me, they were warnings, symptoms of a market fueled by belief rather than fundamentals. I opened my notebook where I recorded the unspoken truths the tape whispered each day. The numbers from the previous session were clear, prices rising on declining volume. That pattern is not strength. It is quiet distribution. The informed money sells into the enthusiasm of the uninformed. I wrote a simple line at the top of the page. The cycle is turning. No drama, no prophecy, just a recognition rooted in decades of studying human behavior and market cycles. I had seen optimism like this before, in 1907, in 1919, in countless smaller waves of speculation. People believe rising markets reflect the strength of an economy, but they often reflect only the confidence of crowds. And confidence is fragile. After breakfast, I stepped outside. The doorman greeted me cheerfully, as if nothing in the world could possibly go wrong. Fifth Avenue glowed with energy. Elegant shops opening their doors, businessmen striding with purpose, families strolling with a sense of ease that prosperity had afforded them. As my Packard rolled downtown, the city shifted. The buildings grew taller and tighter. The atmosphere grew denser. Wall Street always carried an underlying tension, even on calm days. But on mornings like this, when the data whispered a story the city refused to hear, that tension felt heavier. Arriving at 110 Wall Street, I found Noble waiting for me. He carried a stack of reports, his expression thoughtful. "London showed early weakness," he said. "Not dramatic, but noticeable." I nodded. London often reacted faster to shifts in global confidence. Their activity was one of the earliest barometers of what was coming. I reviewed the numbers carefully. Something subtle had changed. The enthusiasm that fueled the past months wasn't matched by internal strength. Volume patterns were thinning. Key stocks were struggling to maintain their highs. Heavy buying came not from seasoned investors, but from ordinary men and women using borrowed funds. Margin debt was at levels that made the market dangerously top-heavy. People believed the bull market could not fail. That belief alone told me we were nearing its end. Around midday, I walked to Delmonico's for lunch with several brokers. They were smart men, experienced, successful, but even they were wrapped in the same optimism that gripped the city. One predicted the Dow would reach 400 within months. Another said modern industry had made downturns obsolete. A third insisted the government would intervene before any serious decline. I listened. I nodded. and I understood something important. The sentiment wasn't rational anymore. When markets reach their peak, logic is the first casualty. People see only what they want to see. Leaving the restaurant, I felt more certain than ever that the cycle had reached exhaustion. Back in my office that afternoon, I focused on the ticker tape, the heartbeat of the market. Traders today live by screens, but in 1929, the tape told the story in real time. Its rhythm, its hesitations, its accelerations, all of them mattered. That day, the tape moved oddly. Stocks rose quickly, stalled in unnatural pauses, then slipped back with disproportionate speed. That was not random fluctuation. It was the signature of informed selling. Distribution was underway. The public didn't notice, but the tape never lies. Later in the day, Noble brought a telegram from London reporting increased selling. The shift was small, but unmistakable. Global confidence was showing cracks. I stayed late at the office, long after most people left. New York outside my window glowed with its usual nighttime energy. People, cars passing, street lamps shining on polished sidewalks. There was no sign of fear, no hint of panic. The country believed it was wealthy beyond imagination. But cycles don't obey belief. They obey balance. Before leaving, I wrote one final line in my notebook. Prepare for major volatility. It wasn't a prediction of doom. It was a statement of readiness. I stepped out into the cool night air, and for the first time in many months, I felt the subtle shift beneath the city's confidence, like the first almost imperceptible tremor before an earthquake. The truth was simple. The market had changed direction, and only a few of us could feel it. That night, walking back to the hotel, I realized something quietly, undeniably certain. The beginning of the end was already behind us. Chapter 2. Cracks in the Foundation. What strikes me most, looking back on those early autumn weeks of 1929, is how calm everything appeared from the outside. New York carried on with its usual confidence, maybe even more so. But beneath that polished surface, the market's internal rhythm had begun to falter in ways subtle enough that only those who lived by the tape would notice. And I did notice, every morning. As September began, I woke earlier than usual. Not out of worry, I never allowed myself to trade on emotion, but because the numbers had taken on a pattern that demanded more attention. I rose before sunrise, often while the city was still a quiet silhouette, and I would sit at the desk by the window of my suite at the Hotel Gotham, notebook open, reviewing the previous day's figures. It was the kind of work that doesn't make headlines and doesn't excite the public, but it reveals the truth long before the newspapers do. The truth in early September was simple. The market was running out of breath. Prices still rose on the surface, but the strength underneath was thinning. Volume softened. Rallies lacked conviction. Leading stocks hesitated the moment they reached new highs. Even the public, though still euphoric, had begun stretching itself dangerously thin with borrowed money. Every morning I noted the same thing in my ledger. Weak internal structure. To me, that phrase carried far more weight than any headline. If I had to choose the moment when the market announced, quietly, almost politely, that we were nearing the precipice, it was the morning Noble brought me the updated leverage reports. He came into my office carrying the papers with an unease he tried to hide. "Margin debt surged again," he said. "Record levels, higher than last week. And the investment trusts," he paused as if weighing whether to continue, "they use an enormous leverage to support their positions." I took the papers from him and read them carefully. Too much borrowed money. Too much blind confidence. Too much belief masking as strategy. Leverage is the great deceiver. It magnifies gains until even the cautious become bold, but it also turns the smallest downturn into catastrophe. I remember setting the papers down and saying, almost to myself, "Nothing built on this much borrowed confidence can last." And I meant every word. Around mid-September, I received a telegram from London, brief but unmistakably important. It indicated increased selling among major institutional players. Not panic, not liquidation, but a subtle pullback. In a stable market, London's behavior often mirrors ours, but in an unstable one, London moves early. The moment I read that telegram, I felt a familiar tightening in my chest. Not fear, but recognition. I'd seen this sequence before. International markets, especially London, served as an early warning system. The tremors begin abroad, then cross the Atlantic like ripples before becoming waves. I wrote in my notebook, "Foreign weakness confirms pattern." No exclamation point, no underlining, just a simple note, the kind that carries more meaning years later than it did in the moment. In late September, whispers began circulating among the largest banking houses. These weren't public conversations. They rarely are. The financial system senses danger long before it admits it. I was invited to a private gathering at one of the major banks, discreetly arranged, attended only by men who understood the stakes of the market better than anyone else in the country. The room was quiet, the atmosphere serious. Without speaking names or betraying confidences, I can tell you the mood was cautious, concerned, tense in a quiet, intellectual way. We discussed credit conditions, margin exposure, liquidity strains, the over-reliance on investment trusts, and the alarming fact that so much of the nation's capital was tied up in speculation, not productivity. Someone asked whether the market could continue climbing. Someone else asked if a downturn could be contained. I remember saying, calmly, simply, "Once confidence breaks, containment becomes nearly impossible." It wasn't a warning, it was a fact. When I left that meeting, I knew that we were closer to the breaking point than anyone on the street understood. By the third week of September, the tape lost any semblance of healthy movement. It became erratic in a way that seasoned traders recognize instantly. Too many sudden stalls, too many reversals mid-rally, too much volatility in stocks that were supposed to be stable. This wasn't normal fluctuation. This was structural strain. One afternoon, I watched the tape as several blue-chip stocks failed to hold gains they should have kept easily. Heavy buying appeared in irregular bursts, a sign of artificial support, likely from institutions trying to steady the market's appearance. Such support never lasts. It only delays the inevitable. Later that day, Noble stepped into my office with his coat still creased from rushing. "Jesse," he said, "one of the investment trusts withdrew a major portion of their call loan account. Brokers are scrambling for liquidity." That was the moment I leaned back in my chair and closed my eyes. It had begun. Not the crash, no, not yet, but the internal break had occurred. The tension was now too great to ignore. Outside, New York remained blissfully unaware. Evenings were filled with people dining, dancing, talking of profits and new records. Cabs honked, lights glowed, radios hummed with cheerful news. It was as if the entire city had chosen to look away from the truth. But markets have no loyalty to belief, and they do not reward ignorance. Every night I returned to my hotel and reviewed the day's figures. Every night the pattern grew clearer, and every night, before I closed my notebook, I wrote one line: "The foundation is cracking." By the end of September, the crack was no longer theoretical. It was widening. The last days before the real break were unnervingly peaceful. The market even rallied slightly, the kind of rally that fools the hopeful into thinking the worst has passed. To me, it was one of the clearest signs that the downturn was imminent. False rallies are the final breath of an exhausted bull. On one of those quiet evenings, as I left the office and walked through the cooling air of Lower Manhattan, I remember stopping just outside the exchange. People streamed past me. Clerks, traders, brokers, ordinary workers unaware of the storm forming just above their heads. And in that moment I thought, when this ends, it will end fast. I felt no panic, just certainty. Everything I'd studied, every chart, every pattern, every instinct shaped over decades, told me the same thing. We were out of time. What remained was only the question of when the break would come, and the answer, though no one knew it then, was only days away. Chapter 3. The Breaking Point. By the time October arrived, the feeling in my chest was no longer subtle. Even now, all these years later, I can recall the sensation precisely. A weight, a pressure, the kind that appears only when every signal you've studied aligns in a single direction. The market was strained, not visibly, not to the public eye, but deep inside its structure. I woke early on October 23rd, earlier than usual. There was a heaviness to the air in my suite, the kind of quiet that makes a man pause before reaching for his robe. I walked to the window overlooking Fifth Avenue. The street lamps still burned against the dawn, casting long shadows on the pavement. The city looked as steady as ever, but I had learned long ago that the appearance of stability often masks its opposite. I dressed quickly, taking only a moment at the desk to skim the prior day's numbers. They were wrong, unnatural. Price movements lacked cohesion. Several key stocks had fallen sharply despite no major news. It was the kind of divergence that told me institutional confidence had snapped. I wrote a single word in my notebook: imminent. Then I closed the book and left for Wall Street. When I stepped out of the Packard onto Wall Street, everything looked routine. The clerks were rushing, the messengers weaving through foot traffic, the exchange humming with its usual urgency. But beneath that surface energy there was something else, a subtle tension, like the air before a storm. I reached my office at 110 Wall Street at 8:45. Noble was already there, pale, holding the telephone receiver slightly away from his ear as if it were carrying fire. He turned the moment I entered. "Jesse, the selling orders coming in from Europe, it's unprecedented." I didn't sit. I simply held out my hand for the reports he was carrying. Foreign liquidation, heavy selling in London, Paris showing strain, banks overseas tightening credit. The chain reaction had begun. At 9:30, the bell rang, and everything changed. It didn't start with a crash. It started with a slide, sharp, sudden, and unnervingly heavy. Stocks that had seemed untouchable began to falter. The tape printed prices that dropped. I stayed at the office long after the exchange closed. The air felt heavy. The streets outside were strangely subdued, pockets of quiet conversation rather than the usual rush. Some men paced the sidewalks, talking to themselves. Others gathered at newsstands, demanding more information than the papers could provide. Fear had entered the city, but only lightly. The real panic was still ahead. Before leaving, I reviewed my short positions. They were strong, protected, well-timed. I had learned from painful experience that the greatest danger during collapses comes not from the fall itself, but from mismanaging one's own discipline during it. I locked in nothing that night. I waited. I wrote a line in my ledger: Thursday, first break, the worst still ahead. Then I left the office and walked the short distance to my car. The night air was cool, still, almost deceptively calm. I knew even before I reached the hotel that Monday would reveal the truth, whether the market had absorbed the shock or whether it would rupture completely. Most people slept that night believing the worst was over. I knew they were wrong. On Monday, October 28th, I woke with the same clarity I felt before the worst days of 1907. It's difficult to explain to someone who hasn't lived through multiple panics, but you can feel the collapse before it arrives. It's in the rhythm of the numbers, in the speed of the orders, in the strain behind every uptick and downtick. When I reached my office, the phones were already ringing in an unbroken chorus. Noble handed me the receiver immediately. The voice on the line said, "Livermore, there are no buyers. None. It's chaos." By the opening bell, the market fell so fast the tape lagged minutes behind real prices. Selling was frantic. Margin calls were cascading. Stocks dropped in chunks so large that the clerks struggled to keep pace. This was no longer distribution. This was liquidation. The public, which had borrowed heavily to finance their positions, was completely exposed. And when the market turned against them, the brokers called in their loans. Those who couldn't pay were forced to sell, creating a chain reaction that fed on itself. I watched it unfold with a stillness that came from experience, not indifference. A collapse like this is not exciting. It is tragic. By the closing bell, the market had dropped more in one day than anyone alive had ever witnessed. But even then, even after the wreckage of Black Monday, the worst was still ahead. October 29th, 1929, Black Tuesday. That morning, the streets were already crowded when I arrived. Thousands of people gathered outside brokerage houses, hoping for reassurance that did not exist. The tension was visceral, a living thing. Inside the exchange, I could sense the panic before the bell even rang. At 9:30, the market plunged with a violence no one had imagined possible. 16 million shares traded. Prices collapsed in freefall. Clerks fainted. Phones shorted out from overuse. Runners broke into sprints between posts. The sound wasn't a roar anymore. It was a scream. I had lived through panics, but nothing, not even 1907, compared to the ferocity of Black Tuesday. This was not a correction. This was a systemic rupture. The bull market had died, and with it, the illusion of endless prosperity. When the closing bell finally rang, the noise that followed wasn't relief. It was disbelief, a stunned, hollow quiet. I sat at my desk long after the floor went dark. The tape lay still. My hands were steady, my mind strangely calm. The cycle had completed its arc, and all that remained was to face the aftermath. Chapter 4. After the Fall. In the years since 1929, people have often asked me what the world felt like in the days immediately following the crash. They imagine chaos lingering in the air, a city drowning in panic, a sense that everything had suddenly and violently come undone. But the truth is quieter. The truth is heavier. The truth settles in slowly, like dust after a building collapses. The morning after Black Tuesday, I woke before dawn. Sleep had been shallow, not because I was fearful, but because I knew the weight of what the country was about to confront. The market wasn't just correcting anymore. It wasn't even crashing. It had broken, clean through, in a way that would reshape the entire nation. As I stood by the window of my suite overlooking Fifth Avenue, the city lights flickered faintly in the early dark. I watched a newspaper boy struggle with a heavy stack of papers. Even from 7 floors up, I could see the bold headline stretched across the top. Wall Street in ruins. Unprecedented panic. For a long moment, I stood there, simply watching him arrange the papers. The world had changed for him, too. He just didn't know it yet. When I arrived on Wall Street that morning, the city felt muted. Not silent. New York is never silent. But subdued, as if every sound carried an undertone of disbelief. Small groups gathered on street corners, reading the newspapers aloud to one another, shaking their heads, searching for any hopeful turn in the words. Clerks moved more slowly than usual. Even the steps of the brokers returning to their offices seemed unsure. Inside my own building, the phones were already ringing. Noble had arrived early, and his desk was covered with telegrams and reports. Without looking up, he said, "Liquidation orders kept coming overnight. Several trusts are insolvent. Banks are nervous." I nodded, taking the top report from his desk. The numbers were brutal, but not surprising. This wasn't a single-day event. This was the start of something deeper, a contraction of confidence large enough to shake the entire economy. When I reached my office, I sat for a long moment before opening my ledger. Not to admire gains, though I had made them, but to understand the magnitude of what was happening. Profit means little when set beside national devastation. People assume the crash was hardest on those who lost fortunes, but money can be rebuilt. What broke far more deeply was belief in institutions, in markets, in the idea that prosperity was a permanent American right. That morning, I watched from my office window as a young broker staggered out of the exchange, one hand pressed against his forehead. He sat down on the curb, staring at nothing. Another man approached him, placed a hand on his shoulder, spoke to him quietly. The younger broker just shook his head. I had seen that expression before, in 1907, in 1919, but never on this scale. This time, it wasn't just professionals who were affected. It was families. It was factories. It was farmers in the Midwest who had mortgaged their land to buy shares they didn't understand. It was clerks, barbers, teachers, ordinary Americans whose lives had been tied to an illusion of endless growth. Watching that unfold was harder than any personal loss I had experienced in the market. Around noon, after a long morning of reviewing numbers, Noble came into my office with an expression I had seen only a few times in our years working together. "Jesse, the final tallies from yesterday confirm it." I didn't ask what "it" was. I could tell from his voice. He placed the sheets on my desk anyway. The declines were staggering. Entire blocks of value erased. Years of gains gone in hours. I sat back in my chair, breathed slowly, and said the words I had known were coming. The crash is complete. Not the depression. That would take time to reveal itself. But the market, as it had existed for a decade, was gone. Noble swallowed. What do we do now? What we had always done. Study the new reality. Accept it. Adapt. Markets do not rise forever. They do not fall forever. They expand and contract, breathe in and out, just as human beings do. But the contraction we stood at the beginning of, this one, would be long.
Later that afternoon, I made the decision to close the final portion of my short positions. Not out of greed. I already had more than enough. But because once the true collapse is complete, holding too long becomes as dangerous as acting too soon. My broker's voice was tight when I gave the order. "Livermore, do you realize what you've made through all this?" "Yes," I said quietly. "But that isn't what matters today." The market's fall had made me one of the wealthiest men in America. Yet, looking at the devastation outside my window, I felt no triumph. You don't celebrate when the building collapses just because you escaped the rubble. You simply acknowledge that you survived, and others didn't. As the days unfolded, bankruptcies began to pour in. Banks tightened credit. Factories slowed production. Families who had bought shares with their savings realized those pieces of paper were now worth less than the ink printed on them. And every night, I returned to my suite at the Hotel Gotham and recorded the day's events in my ledger. Not the prices, not the volatility, but the emotional truth behind them. The truth was simple. A nation had believed in a dream too fragile to support its own weight, and when it fell hard. One night, near the end of October, I stepped out onto the balcony of my suite. The city stretched beneath me, dimmer than before, quieter. The confidence that had fueled the roaring 20s was gone, and as the cold wind passed over me, I felt something I hadn't let myself feel in all the weeks leading up to the crash. A sadness deeper than any market loss. Not for myself, but for the thousands who trusted a system that had never been as stable as it appeared. I leaned on the railing and whispered aloud, almost to the city itself. This wasn't inevitable, but it was predictable. Markets follow cycles. People follow hope. And hope, unchecked, always runs faster than reason. In early November, after the worst of the immediate collapse had passed, I opened my ledger one last time to write a summary of the cycle's end. My final note was simple. The market has completed its arc. The depression has begun. I closed the book and felt, finally, the true weight of what had happened. The story of 1929 wasn't one of numbers or trades or even the crash itself. It was a story of belief, how it grows, how it blinds, and how it breaks. I had survived because I listened to the quiet signals. Others had fallen because they listened only to the noise. And as I set the ledger aside, I understood something with absolute clarity. This collapse would define a generation, and nothing, not the market, not the country, not even I, would ever be the same.